Wagwan family. Alright, so I know say this is not like the regular intro, but you want to have something for go and watch on the Friday evening. Plus, many finish this whole course thing so that everybody can have the knowledge they need so they can go in the new year with the skill set to make some money off of Forex. You see me? So, what we're going to do today really is just explain the continuation pattern. We're going to do it for the bullish and bearish, for the triangle type, and the rectangle type. Because them that only two we use. I don't really overcomplicate trading. Just simply what works. It don't have to be 100% for me, but what works works. We'll also do the entry techniques, and then we're gonna see if we can find it on the chart. So let's begin. Alright, so basically this is the first one. This is the bullish continuation pattern, the triangle pattern. And why them probably call it triangle, because if you notice from here so to here so to here so, this area right here, so it just seems like a triangle. Simply enough. Say, as me say, keep the thing them simple. Say, so would I explain resistance and support, and so no really need to go into that. So what the continuation pattern is really is just that each time the price goes down and come back, it has a shorter range of motion. It has a shorter range of motion, and it always respects the support. So it now go past the support, and even if we even show you if you not see it, if you go to BAM and start from even down here or whatever, and we try come up right here, so it's still, that area still seem like a, a little triangle. If you see what I see, I don't know, but it look like a little triangle though, or a piece of flag. Anyways, so what happens is that you just, so what happens now, you have lower high, and then price will come down here, so probably touch the support and then break. See break now, so this trend line right here so become null and void because the price break above it and come back and retest right here, so and continue to push. So you have higher high and then we have new high. So this is which part the market decides. Alright, we'll start from here so and continue all the way to wherever the market want to go. So I did say the support maintain and break the resistance, which is right here, so it break right here, so and then we start from here, so and typically we'll just buy from right here, so let's go to the bearish one now. Same concept. You can see the whole triangle thing, and you see break and then retest back the zone and then continue. Especially you see when you see it go upwards, it normally drop fast when it come down. So, quick way. So if you can spot it from the time and go up, so and you see drop, see how you know a good looking food right there. So yeah, low, and each time it have a shorter range of motion and go up, but it still I respect the support. It still respect the support until it just drop it. So I mean mistake right here, so still mistake is let's fix it right here, so before somebody say, so it's more like support maintain and break resistance you see me? So yeah, sorry for that little thing there. So now we're gonna jump, that is that them two here are the triangle one. See if we can put it in one frame and squint it up. So yeah, the triangle, as you can see the triangle. I think that was simple enough, you see me? So we're going to go for the rectangles now. Rectangles them down here, so the rectangle basically now, so this is for the bullish, where with a buy. I don't see why mix bullish. Yeah. So this is the bullish area. Say that continue with the bullish thing overall. Say it goes a bam. So it break into a particular price range, and then it just basically a consolidate until it break again and form a new high, and then it come back right here, so we confirm and say alright, here's where I start back from and continue. So this mean high resistance, you know, it'll be high support, but it break out through the high resistance, you see me? And it just continue. And normally we buy at the higher low point, which is right here, so, and you just continue. So you have high low equal support, which is the higher low right here, so equal the new support, and we just buy right there. So after I hit and it show confirmation, which you know is either bullish engulfing at the pin bar, we still jump on that, but yeah, for the spot that one, you know, of course it a got inverse channel. Guys, I am so sorry, I don't know what was going on. So yeah, for the bullish, the bearish, sorry, are the same concept, just the reversal of it, and is basically the same consolidation between a particular price range. It break, it form a new low, then come back right here, so lower high, which is basically, you know, which part market decides, right, to start back from there, so, and continue on it where we normally buy right here, so, and as we say, the lower high resistance, equal resistance, and then we just get confirmation for go down. So with a buy at the same thing. So what we're going to do now is go to the entries, so you can, you know, kind of understand it much better. So find the first one, put it all over the place. So I have to know, just find it and see if we can make it properly for you guys. So entry technique, just fix it look neater. So we all know, basically we all know the uptrend. You see me? Everybody know uptrend. Got about 3 videos this now I explain uptrend. So you know, higher low, higher low, higher low, higher low, higher low. So what happened right here is, so now where we just continuously a buy. Remember I said in the last video. If not, me unnotch it, me put a link up here, so somewhere up on top. But yeah, what me there explain was that you notice that some traders have one mega entries. So typically something like this them probably I do. So you know, roof, old floor, old roof, new floor, old floor, new roof, and we just move from there. So with a buy, so a buy would equal to a higher low, which will be right here. So and it have a bullish engulfing. You see me? Alright, what we're gonna do, we'll jump on a definition of it and we'll come back right here. So alright, so sorry for the weird cut again. Alright, so the bullish engulfing pattern is two candle reversal pattern. Second candle completely engulfs the real body of the first candle without regards of the length of the tail or shadow. The bullish engulfing pattern appears in a downtrend and is combination of a dark candle followed by a large hollow candle, which basically, if we can speak an image, is just simply saying that the engulf, it mean say this right here. So overall the whole move cover everything what this did basically have for offer, or the previous did have to offer, and really adjust the same thing for reverse. Something can find a reversal, whereas the bull is the bigger of the two Uh, Alright, see one here? It basically, see there, everything it have for offer. See me? So yeah. Alright, so probably I was like, jump back on the chart. So see it here now. See the downtrend, and then you have the pin bar, which basically is like, a wick out. But the whole move right here, so it's really engulfing. So it's a pin bar plus a engulfing. No want to complicate it, but I just basically the bullish I cover everything what this have. So basically cover everything, wick everything. You see me? So now I'm gonna do the enter right here, so and then just go and continue to the uptrend. So say that move from a downtrend to a uptrend. Alright, so for the next thing before jumping, we just go on the pin bar because yeah, I just did show the bullish engulfing. So I jump on it again. Alright guys, so sorry for the weird cut. Let me just jump on the browser real quick. So alright, a pin bar pattern consists of one price bar, typically a candlestick price bar, which represents a sharp reversal and price rejection. The pin bar reversal, as it is sometimes called, is defined by the long tail. The tail is also referred to as a shadow or a wick. So jump on the first example. And basically see it here. So this are the body and this are the wick. And this are basically the pin bar. The whole thing a pin bar. So yeah, make way jump back on the charts. Alright guys, so see it here back. We'll go up on the next one, which is somewhere up here. So yep, which is, just give me a little second, isn't it? Which is the opposite. You see me? The opposite. So the same market entry. You see me? Our entry technique. So downtrend, same thing. Bam, 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 bam. And then you see lower high plus bullish engulfing, bearish engulfing. Equal. Bam. So you go so bam. See there, the BE mean bearish engulfing. So you have an uptrend. And then as I said, the same thing basically. See, just reverse. And you cover everything. And then see there. Bam, 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 bam. So yeah, basically that's it.